InCred PMS is joining in. Aditya, good to have you with us here. Thank you very much for your time. Uh, Again, I mean, first a quick comment on what is this sell-off all about. Is it really worries about US banks, Aditya, or this is a continuation of what we'd seen earlier, what we had been seeing earlier? Just FI selling, probably to buy cheaper markets elsewhere. What's the big worry? Yeah.
Frankly speaking, I think so. It is a combination of both the things, because obviously US banks going down gives you some bit of a jitter, basically. But what we have seen is that, the Indian economy is fairly insulated, both from a banking standpoint, and it all depends upon, how quickly the Fed steps up in terms of, ring fencing the banks which are troubled. So obviously we are in a phase of heightened volatility. But if you carefully look at, what has happened to asset classes last year globally, we had a big sell-off in bonds, which has not happened in the last 70 years. People ended up losing money there. People lost money in currency. People who lost money in crypto. People lost money in FANG stocks. And we were seeing, some bit of a respite in the sense that, calendar year we have seen most of this, rallying, FANG was up, crypto was up. Ideally speaking, I think so. India has held up well despite this sell-off or this continuation of the trend of FI selling. I think so. This continues to be a market wherein we have seen very large divergence between the headline indices and the performance of small and mid-cap companies, particularly small cap. I think so. This is an excellent environment to just focus on your set of companies and build a portfolio. I think so. This too shall pass. That is the view that we have purely on a bottom-up basis. What we also see is that demand is holding up reasonably well. Plus, what has happened is that something has to go up. You cannot believe that we continue to be in a environment wherein inflation will continue to be high, and you will have at the same time, if the growth is slowing down, something has to give up. To my mind, I think so. The way energy is behaving now, I think so. Inflation expectations will clearly readjust to the new normal, and that is what clearly the Fed terminal rate is also indicating now.
Aditya, I remember in our last conversation, you had spoken about how you're very bullish about Tejas Networks and the addressable market opportunity is so much higher for Tejas Networks, double of what it is currently today. Another stock in your portfolio is Intellect Design Arena. Now, the stock price is at 400 rupees. Its high a couple of years ago was more than 950 rupees, which means it's more than halved. And this whole transition from a products company to platforms has, hurt the company's revenue growth, the kind of margins it used to report. Your thoughts on Intellect Design Arena and why you continue to remain optimistic?
So there are two elements to the story. I think so. The first element is that, we are trying to reassess. There is an element of earnings cut, which is coupled with multiple cut as well. So if you look at, Intellect specifically, what essentially happened is that, there was a turnaround, stock rallied from 100 to 950. Now, what we have seen is that, the stock multiple was very, very steep. It was trading, in fact, at 35 times forward at one point in time. Today, what we find interesting is that the valuations are much more reasonable. Obviously, there is a cloud transition which is going on. Obviously, it is, having a very large, pretty much all the exposure is towards BFSI. So our view is that, there is a limited room for multiples to be cut. Obviously, we have seen, some sort of growth also tapering out. But this is a clear-cut example of a company wherein, one has to take a 2-3 year view. So what we are saying essentially is that, there is a limited downside in the stock. Risk to reward is very, very favorable. Ultimately, what a PMS should do essentially is to look at a 3 to 5 year story. So in most of these companies, what we are seeing is that, the total addressable market is expanding as they, move towards cloud migration, and as they, have US as an important geography in the phase of, growth. this is going to be, a very, very large total addressable market for the company. So clearly, multiples cannot be cut from here on. That is what our belief is. And obviously, earnings growth should support the stock.
Okay, so that's one particular view. Aditya, you also have, I think, Tejas Networks in your holdings. Give us some thoughts over there, and whether you would be happy to add more on the defense side. How do you find valuations right now?
So valuations have got, two elements as far as, again, clearly an example of, a total addressable market being, far higher. So when we started to look at the stock, possibly the BSNL contract was looking like a 8,000 crore opportunity. It possibly is going to be a 12 to 13,000 crore opportunity. Second, very critical element for a company like Tejas is the semiconductor shortage. Obviously, they reported a loss last year. Third element is got to do with the balance sheet of the company. In the past, what we have seen is that, the working capital cycle was very elongated for this company. Now, with TCS being a system integrator, what we do believe is that, part of the balance sheet risk gets transferred from Tejas in terms of, earlier BharatNet or BSNL as a customer to possibly TCS. So our view is that, essentially this is again an example of Make in India. As you are aware that, Tejas is the second largest telecom equipment manufacturer in the country. Obviously, we have got the Chinese, there is a large government contract which possibly, they are going to bag. So our view is that, the order book is getting bigger and bigger. And then there is some element of cyclicalities of raw material costs subsiding. And this is what we clearly believe. If you look at the universe of, what we find interesting in small cap companies is that there was a lot of raw material inflation that hurt a lot of companies. Now what we have seen is that it was having a direct impact on gross margins. Now we are seeing EBITDA margins getting normalized as these cost pressures sort of subside, and that is where we are focusing on. So what is essentially means is that the gross margin should expand, and hence the EBITDA margin should also expand for a lot of these companies. Purely in terms of valuation, the simple expectation here is that there is a PLI benefit. There is a other income element, because obviously they are a net cash balance sheet today. So we find the stock to be reasonably priced.
Okay.
All right, Aditya, we'll leave it there. Thank you very